the signal you can't ignore, and what it means for Bitcoin price. Hey guys, it's Keith Allen. Hope you're having a fantastic day. Hope you're printing some green P&L here this week. It's actually seems pretty easy to do right now, and well, it might be, but I want to be clear about something. Especially if you're new to trading, realize that what we're experiencing right now is not the norm. And to do this sustainably, to trade successfully, sustainably over time is not easy. So if you're looking for somebody to tell you, oh, this is how much money I make because it's super easy and you can do it too, I'm not that guy. I'm the guy that's going to be realistic with you. I'm going to show you how difficult things can be. I'm going to show you to my best of my ability in an unbiased manner to show you where an asset has the potential to move up, where it has a potential to break down, and what to look for. Try and teach you some of the methods and some of the indicators and some of the tools that I use along the way to help you make more informed decisions. It's about making data-driven decisions rather than following the narrative of the week. Well, at the moment, we're getting a bit of a pullback, and the reason for that is likely because we had some economic data coming in today. And so like I said, I'm going to spend most of the time talking about this indicator that I have teased you with, but I will show you what I think is influencing things right now. Obviously, you can see here on fire charts, we're getting a bit of a pullback here coming into support in the 89K range. We'll see if this holds. If not, we've got support stacked from 84 through 85 and up to that 86, 87 level, which has been tested a little bit as of recently. So I think what the market is reacting to right now is today's economic reports, which came in a bit hotter than expected on the core PPI. Jobless claims were a little cooler than expected. That's fine. Continuing claims also a little bit. Actually, those were kind of in line with forecast. But the core PPI year over year was a hot number. And the reason the market reacts to that is people are wondering how that's going to influence sentiment on a potential Fed cut. Prior to the announcement, actually, I think I looked at this a little bit after, 82.3% said we would be likely to get a rate cut in December, and that's now dropped to 75%. This is all, of course, highly speculative, but that is the reason for the dip that we're experiencing right now. But fear not, because today we're going to talk about some key things happening here in the charts. Let me move to the daily chart and show you exactly what I'm pointing to. Back in December, not December, over the summer, we saw a series of death crosses. And I had marked them all. I don't have that chart open right now, so I'm not even going to go there. No need to point out the arrows that I had marked. But at the time, this started after we hit the what was then the new all-time high, just prior to the halving. Bitcoin hit 73K, and then things started breaking down. We dropped below the 21-day moving average, and then the 21 death crossed below the 50-day moving average, and continued to spiral down, then crossed briefly below the 100-day moving average. We saw this series, but it really got nasty in the summer, July, August, when we saw this rapid downtrend. This was, if you recall, August 5th, there was a Japanese carry trade that unwound, flash crashed all markets, TradFi included. And that gave us our first retest, our only retest of that 50K range. And at the time, if you scroll back through history and look at my analysis back then, we were looking for signs that would show reversal of the trend after the series of death crosses that we had. First, it was the 21 between, the 100, then the 200 and the 50. They were all wound up, all crossed up here. And at the time, I had looked at the chart historically, and gosh, I probably should have the other chart open, that marked double bottoms as reversions that signaled reversions on a lot of these rapid depth crosses among all of the moving averages. We got that here on a retest, and you're looking at this and going, hey, why is that? That doesn't look like a double bottom. One wick is way lower. Well, this was a flash crash. And if we take this to a line chart where we eliminate the wicks, then we can see it was indeed a perfect double bottom. And this marked the trend reversal beginning. Once that trend reversal begins, that's when we start seeing golden crosses. And the golden crosses are when the lower moving averages cross back above the higher moving averages. In other words, they're unwinding. So we saw the 21 unwind from the 50 and the 100 and eventually the 200. And then we saw the 50 unwind from the 100 and eventually the 200. And now today, we are seeing the 100-day moving average unwind from the 200-day moving average. This is the last golden cross in the chart between the key moving averages. It's already happened on the weekly time frame. You can see 21-week, 50-week, 100-week, 200-week. Everything is as it should be. And when this happens, yes, moving averages are lagging indicators, but typically golden crosses and death crosses signal not just the lagging trend, but there is frequently a continuation of trend. And so what this signals for me is, number one, confirmation, validation, whatever you want to call it. If there was any speculation on whether or not we were indeed in bull market territory, this is a bull market, undeniable in my opinion. Secondly, this trend likely to continue. You can see the trajectory. Even though we're rolled off all-time highs, these signals do not mean up only. Up only is never really a good thing. Yes, we emerged from these prior ranges. You can see the 25 to 30K range. We emerged and never looked back, and then found a consolidation range in the 40 to 45K range. Emerged and never looked back. Found a brief consolidation range in the 50 to 52K range. Emerged, finally looked back, and that's when we got the trend reversal. So at some point in time, Bitcoin is going to need to find a consolidation range. And that hasn't happened yet because we haven't had enough time up here yet, right? The last consolidation range was, in my opinion, in this range between the 2021 mid-cycle top around 65K and the 2021 top at 69K. We spent a lot of time here, lots of time, and certainly heaps of time wrestling with that 2021 top at 69K and finally emerged. So I think it is a low probability that we will go back to retest this 70K, this 69, 70K level. Based on where the moving averages are pulling up to right now, especially as these drag up higher above this level. It's not out of the question at this point. And until we establish a consolidation range and actually test support in those ranges, then there is a chance. Okay, I'm not ruling this out. But the reason I think it's less likely is number one, the moving averages are drawing up, and also because of where liquidity sits in the order book. So I'm not concerned by what I'm seeing right here, right? Yes, there's a dump, and yes, listen, in these runs is always a good time to take profits, right? There's realized gains are what makes the world go round, right? If your goal is to buy low and sell high, well, when we're sniffing up in new all-time high territory, there's always an opportunity to make some money. And when you look at this orange class on the CBD, don't think that is retail getting wrecked. Sure, retail lives in this class, but there are whale-controlled bots T-whopping through a lot of periods in this, and this is a prime example. You see this steep but smooth sloping diagonal line. That is clearly a TWAP bot taking profits as price moves up. All right, nothing wrong with that whatsoever. So I told you that the moving averages was one reason why I have confidence in staying in an elevated range. The other thing is where liquidity is, and you can see that we do have. And I'm going to use the volume filter to um, really highlight where the most important levels of liquidity are sitting. Obviously, we have strong resistance above about 85 million in ask liquidity at the 95K level, and another 136 million at the 100K level. Um, Down here, we're coming into a ladder of bid liquidity. The strongest level of it is strongest concentration. Looks like it is around the 86K level, and secondary support at the uh, above 80, about 81K level. And then finally, another level of support around that 75, 76K level. In my opinion, 75K and 100K are psychological, but where we see the contour in the chart beginning, we do have a little bit, not a lot, but a little bit of consolidation in this range here above 75K. That's basically 75. What is that? 75.5 to 76,750 range is potential. And then here, of course, is that level above 80K. And lastly, we're coming into this support range here above 88K. Will this 88 hold at this point? That's the question that we're wondering as we look at the charts, and we can maybe gain some insight to that by looking at lower time frames on fire charts and getting a snapshot of the liquidity and the order flow that's happening with it, right? So let's take it down to the daily, and you can see this. Let me show you one of the cool things about this version of fire charts. We can use the reason it looks so dark here and it looks like it's empty is because the color scaling is relative to the brightest spot on the chart. And up here we had, you know, almost 100 million in ask liquidity at this point at that single level. The binning is different in different time frames, so that's why this is different than what we saw in the weekly chart. But uh, that's 96 million in at the 100K mark, and so this looks pretty dark down here comparative. But and why? Because this next level, that's 45 million. This down here, this is 16 million. But if we push the contrast here, the volume percentile filter, we can see more granularly that some of the bid liquidity down here at 84 seems to be broken up and laddered up above 85. So they're ready to go after this and push price up. They're happy to get filled. There's no certainty or comfort that the price will dip below 85. So this entity has decided to ladder their bids up into and closer to the active trading range to see if they can get filled. Yes, there is selling going on right here, but we also know that ETFs have been aggressively buying this past week, 1, 2, 3, 4, 5 consecutive trading days. BlackRock alone, that's over 1 billion, right? 1.1 billion, 1.3 billion. That's now in the $2 billion territory, 2.7, 3 billion roughly in the past 1, 2, 3, 4, 5 trading days just from BlackRock. So the demand is here. If you think these guys are buying tops, well, it might be local tops, but do you think they're buying in this volume because they think it's going to be a cycle top? Absolutely not. And we also know that the ETFs have really just scratched the surface of what's possible because as price comes into these new ranges, right, and especially I expect to see even more after breaking 100K. But there are asset managers who either are not allocated or maybe are have small 1% positions in crypto related assets that likely want to expand their offerings to their customers. And so I expect that ETF demand to continue to flourish. The pump that we're seeing, the quote unquote Trump pump, is something that we forecasted before the election. If he won, we knew there would likely be a rapid rise in price. But I maintain that the faster this goes without any sort of retrace, the more dangerous it is in terms of how deep we could go on a retrace. So these pullbacks, in my opinion, are healthy, and if this one can hold here at these previously tested levels, that, in my opinion, would be a sign of strength. That listen, if the new consolidation range, if the new support level, whether it ends up at 86K, whether it ends up at 80K, whether it ends up down here in the 75K range, I'm good as long as it's above the 2021 top. I'm happy to just keep progressing. And any retests that are successful are signs of strength for the next leg up. So where we go from here, how long it takes to break the all-time high again, or more importantly, because the all-time high is getting broken literally day after day and several times a day. I think the question is, do we break 100K before Thanksgiving? Who cares? Do we break it before the end of the year? Who cares? As long as we break it, as long as Bitcoin stays on this trend, I'm happy. And so, in terms of where we go, I think there's a lot of speculation. The technical targets that I have are based on a measured move out of this cup and handle, and that puts us in the 122 to 100, basically the 122.5K range. But that is not necessarily a cycle top target. It might be. I don't know. That's my target from the measured move. Now, that happens to coincide with where that lifetime trend is, and I think that is notable, right? Bitcoin may or may not make it back into that trend line, and while we're in price discovery, and some people go, we're in price discovery, there's no resistance anywhere. There is resistance. The resistance is on this lifetime channel, and it's somewhat of a glass ceiling at this point, right? It's questionable of whether or not we ever make it back into that channel or not. If we didn't, and we just continue to hover along somewhere above this level and somewhere below this level, we could still ascend to astronomical heights. If it makes it into this channel, if Bitcoin does indeed recover the channel, then we would look to the center line as the next level of technical potential technical resistance. And you can see there's basically an imaginary line here right now, and that kind of aligns nicely. Whether you drew it from here to here or here to here, it all kind of correlates with that center line. So that would be also an astronomical number, $500,000 Bitcoin, right? So and that number, that target, is a moving target over time. So the way I trade, I'm not one of those guys that's going to say Bitcoin, like a Robert Kiyosaki who says we're going to have $350,000 Bitcoin this cycle. Nobody can pinpoint that. Michael Saylor says we're going to have 13 or 14 million dollar Bitcoin in the next 20 years. Okay, guess what? Nobody can accurately say that either, right? You're talking about some guys that are at the extreme end, going to say provocative things to lure more money into the market. Make your decisions based on the available data, your risk tolerance, and a broad, holistic view of the market. That's the best I could tell you. So again, it's one level at a time for me. Let's, 100K is psychological. I think getting there faster is not good, or at least not healthier than getting there in a more methodical manner that includes some pullbacks and some corrections and some retests of support. So that's what I'm looking for. I'm looking for those retests of support, and hopefully they come in areas that we've already started building some structure in the chart. So, and the reason you need this is because when price does eventually pull back And it always does eventually pull back, whether it pulls back because the market tops or whether it pulls back because there's a black swan event or some other catalyst that's triggering the reversal. You got to have a landing zone. And if you have straight lines, you don't have much of a landing zone. So the more that we can build in this range, the more that we can build in this range, the better, in my opinion. Even here, right? This was really a potential technical target around 73K. Um, Again, I like that the moving averages are drawing up higher. I like that the 50-day is now correlated with the 2021 top. And as that pulls up higher, I'll have more confidence because you can see the number of times that got retested before we moved into this uptrend, right? So keep an eye on the moving averages. They don't lie. And as long as we're unwinding, we're trending in the right direction. Now, when does that change? When this 21-day moving average death crosses the 50-day moving average, then you need to be paying attention as to whether this trend might be over. That's really going to be the early signal, the first signal of or at least the first technical signal that you might look for is seeing those death crosses begin again. At the moment, it looks like we're a ways from that happening. So hope that gives you some insight as to what I'm looking at, and hopefully gives you some insight as to what you should be looking at as we move forward in this market. But there is no denying the fact that Bitcoin's had a tremendous amount of momentum here recently. Short-term volatility is still expected. Bigger picture points to a strong and sustained uptrend as long as these moving averages remain unwound. And, that's likely to take price well beyond 100K, but just don't expect it to happen without corrections along the way. Going to leave it right there, guys. Hope you have a fantastic day, and hope the data and the charts that I'm sharing are helping you trade smarter.